Welcome back to America's Retirement Headquarters, home of the Retirement Guys formula at America's Medicare Associates with Nolan Baker. 419-794-3030 is the phone number. The website is arhq.com. You want to talk about a costly mistake? A Virginia dad took off in his RV for a family camping trip, and he thought he would save time by taking the express toll lanes. But he didn't realize, weeks later, the bills came, totaling $570. Apparently, he was being penalized for driving an oversized vehicle in the lanes for saving a grand total of about 20 minutes, by the way. Just like hidden toll fees, clients are sometimes caught unawares by fees in their retirement accounts that could add up over time. Nolan, how do you and the team at the Retirement Guys Formula help spot and minimize these costs?
Well, spotting fees that can add up over time is extremely important, and identifying, what fees add value and then trying to eliminate fees that, don't add value. This is an area where technology has dramatically got a lot better. If I go back to 30 years ago, it would be normally that I'd have to grab a 500-page prospectus and go to 10 different sections to add up all the fees and expenses. And today, with some of the tools and technologies that are out there, it does make it a little bit easier. But I will tell you that in general, there are a couple of products that are in the industry that I would say tend to be ones that have some of the higher fees associated with them. A good example of that would be some variable annuities. When you hear about the word annuities, and sometimes people say, well, I don't like annuities, they're generally talking about the cost associated with owning what is called a variable annuity. And not all annuities work the same way. Give you a perfect example. I had met with a couple that had come into the office here recently. He's been a business owner his entire life, and she's been really taking care of the family forever. They're well into what we would normally consider to be retirement years, but he just really loves what he does. He gets up and still goes to work every day, has enough financial assets that he doesn't have to. And so because of that, he gets really good income from still working. He gets, good income from his what's called required minimum distributions on his retirement accounts, and his personal savings have been built up, and he's debt free. So income is fantastic. Well, what he has, and what I was pointing out to him, is he has a variable annuity, and he had a couple of them in his accounts. And within the variable annuity, he had a lifetime income rider on the account. So we took a look at it, and if you added it up, the annuity had something called a mortality expense ratio of, let's say, 1.25%. His investments were put into sub-accounts, and those are the different, equity or fixed income positions, and those sub-accounts have fees and expenses of, anywhere from 0.5% to another 1%. And then he had another 1% associated with the cost of the lifetime income rider. And we took a look at it and we said, hey, if we turned on income right now, how many years would it take for you to get the amount of money that you currently have in that contract? And in their situation, it would have taken until they're in their 90s before they would have got more income out of it than what their account value was. And then I asked them the question. I said, well, is income important to you? Because you have, again, great income from work. You have your required minimum distributions. You have your other personal savings. And, in looking at that, income was not really a goal of theirs, but you have roughly 30, 40, or 50% of the return going out in fees and expenses. It's oftentimes why variable annuities are some of the most costly products in the industry. The other type of product I think that is somewhat tends to be more expensive is some of the non-traded real estate investment trusts that are out there. I know that REITs can be a popular vehicle for people that are looking, for income, but some of those products ultimately can have quite a bit of fees and expenses, especially if they, pay a big commission up front to the person that sold them, the broker dealer who introduced a relationship, and then the ongoing fees and expenses. You really want to make sure that you do your homework. There's also what's called publicly traded real estate companies. So, if real estate and income and retirement is important to you, sometimes you can get more bang for your buck, if you will, with lower cost publicly traded companies. Those publicly traded companies, the negative could be that they're more correlated to market conditions, meaning they're going to go up and down. But the trade off of lower cost and liquidity could make those a little bit more attractive to investors. And the last that I'd say is just considering alternative investments. Alternative investments could be anything from buying, say, gold and precious metals. That's been another hot topic in town. But when you look at gold and precious metals and where you get that money and make those purchases from a local dealer or a national dealer, or whether you buy something, through a online account, you want to pay attention to, what the fees and expenses are. Typically, they're going to be quoted in terms of what's called a bid-ask spread. So if you buy an ounce of gold, you want to ask how much does it cost to buy the ounce of gold. And then if you turned around and you sold that ounce of gold back to the same dealer, what would be the price that they would give? The difference between the two ultimately is related to what is the fee and expense that they're charging on that type of an investment. And again, some of those investments that are more private can have higher expenses. In the alternative space, there's investments that are called like hedge funds. There's investments that are environmentally, socially, government type investments that, because of their requirements to do more research and due diligence, ultimately have higher fees and expenses. There's portfolios that ultimately will incorporate derivatives. Derivatives could be things like options in a portfolio or notes. Those ultimately can add up into more fees and expenses. So I, work really hard on helping people spot fees that can save up over time. I know in the one example of the couple who had come in and had a variable annuity that they weren't going to need the income rider on, that was thousands and thousands and thousands of dollars a year to be able to add back up into their pocket by eliminating some of the fees and expenses that they're paying. So if you're wondering, hey, do I have a plan and am I getting what I'm paying for? And I'm not saying the cheapest is always the best, but if you're
Right.
going to pay a fee or expense, you want to make sure that you get more value in return than what the cost is. Give us a call, because part of that retirement team action plan is we'll do an independent portfolio analysis for you and help you determine exactly what you're paying and show you any areas that we could help maybe try to eliminate to keep more money in your pocket.
Whether it is market volatility, taxation, the fees that you're paying, more money out of those accounts means less money for you to use in retirement. So finding ways to minimize, reduce those expenses is really what it's all about when it comes to your retirement. That independent portfolio analysis can go a long way to getting started. All you need to do to get started is part of that retirement team action plan. Set up a time to speak with America's Retirement Headquarters. ARHQ.com is the website, or you can give a call as well, 419-794-3030.